Then there is Amazon, up 17.5% since November 1st. What matters here? AWS growth. We're going to get the holiday quarter, obviously, for Marketplace. AI, generative AI is going to be a big play here. How do we think about this here?
80 cents in earnings per share. A year ago, they did 3 cents. What I said at the open is really the story. All this leaning out and efficiency, they pulled back the reins on trying to deliver things. Like they were at 1 day and then it was like 6 hours. Do you go to an hour, or can people like relax and we can have some margin expansion? Reintroducing ads into the television product. That'll be interesting. We'll get some color on that. But that quarterly operating income number projected to grow 280% to $10 billion. We don't really think of Amazon in terms of like this juggernaut throwing off, that kind of free cash flow, et cetera. We always have historically thought of it as a company that's really good at growing vertically and horizontally and just constantly delivering on growth. And they are doing that, by the way. AWS is going to be a 13% year-over-year number. It's not 20, but it's also not 2% like Apple. So you're going to get the growth in the AWS business to about $24 billion. That'll be important. But again, thinking about Amazon in terms of its streamlining and in terms of it becoming more profitable, I think makes it a more interesting story for this year. And I agree with what Bryn had to say. Like if you ask me, like which of these names has a better chance of outperforming, I think Amazon versus Apple. I own both. That's what I think is going to happen now.
Surat, how do you?
I'm on your camp.
This?
Yeah, I'm in your camp. I think Amazon's future for the next few quarters is a lot better than when you compare it to Apple, because they've got the levers to pull. I really like the Prime example where you start now, put advertising in there. That's margin that drops to the bottom line.
Yeah.
Right? And you start putting, their efficiency in terms of logistics, that's all going to start to get optimized as well. So you will see that, and that's what investors want, the cash flow and efficiency.
Two things really quickly on the ads. Number one, in 3 years, Amazon became the third largest advertising platform in the world. Like, we're not giving this company any credit for that, but that's a true statement. That's an actual fact. Number two, if you listen to what Netflix had to say the other day, actually, the subscribers that are on the ad tier are more profitable than the subscribers paying full price on the premium tier. Also, not something that I think anyone expected from Netflix or from Prime, for that matter, as they push into this. And then the third thing, and of course, we don't know yet, but very important to point out, any news that they have to share on their AI efforts is going to get a lot of attention just because of the built-in user base that Amazon has to power with AI applications. They have not been the most vocal, but Anthropic is a big deal, and they could talk a lot about that tonight, which I think would be additional upside.
So you guys kind of alluded to this, but let's go deeper. On Bryn, whether you think this is the week that these mega cap stocks separate themselves from each other, that they don't trade anymore as a virtual group, that we do get the divergence between some of these names. Now, maybe the seeds of that have been sown with Microsoft and Alphabet, but you tell me what you think.
I think directionally they can move in the same direction. I think the magnitude, though, will be very different. And so if you think about Amazon also, one thing that Surat and Josh didn't mention is if you've ever toured an Amazon warehouse, they are incredibly sophisticated robotics, but they also have a lot of people doing very tedious tasks. And I think that Amazon, more than any of the mega caps, internally is going to continue to benefit from the productivity increase that their robotics are able to replace humans, and that will go straight to the bottom line. And so I think between their partnership with Anthropic, I think that Amazon is actually flat over the last 2 years. And so we all like to talk about one-year returns, but really over the last 2 years, it's been dead money. I think Andy Jassy has his sea legs. So I think there's all of these little metrics where Amazon, along with Microsoft, can really start pulling away and have, once again, a much more magnitude of a return than I think an Apple, which will be a laggard.